Okay, hello everyone. Welcome to this week's weekly study session. I'm going to go over the market today, the general market, and also the individual stocks. Again, there's not a whole lot to report as far as anything different, except that this has been a pretty frustrating environment for swing traders. And again, at 37 years doing this, I have to say, I haven't seen a market so split and bifurcated and with so much rotation and back and forth action. It's probably one of the more frustrating markets that I've seen. I guess I have to say that if I hadn't taken this short term approach and really sort of prepared myself for this type of theme, I might be pulling the last few hairs out of my head, and I don't have a whole lot to spare. But when we take a look at the risk model really, I think, tells the story as far as how back and forth this market has been. And even though it has an upside bias in many of these indexes, it's been a whipsaw environment because we've seen buy signal, sell signal, buy signal, sell signal. And I'll tell you, we've never had the risk model get whipped around like this in the last, I don't know, 10 or 12 years or so. You can see sell signal on August 18th, buy alert on Friday. General market still positive. Up down volume's been kind of going back and forth between positive and neutral. New highs, new lows. Recently moved to neutral. And stock participation, we can't seem to really get out of this. Stuck in the mud with getting out of a neutral. And sometimes even a negative environment for stock participation, because just when we get some traction on a broader scale, it seemed to have a lot of stocks hit stops. Now, I have to say, I have been probably choking off some of the trades, and I'll go over those in just a second. There are some trades that maybe were a little tight on the stops. They turned around, they went back up. But there's also been some stocks that have had some wider volatility that would have easily stopped you out. Let me just talk about the general market here, and then we'll get into some individual stocks. The long-term trend model is still 100% bullish, ever going all the way back to the buy signal in April of 2020, up almost 60% now since that buy signal. So again, if you're still in those 401k, S&P 500 funds, you can stay put. If you followed my advice, if you remember, I said you can maybe trim back on this, maybe cut half or sell it and then buy it back if the market holds up. You'll probably be maybe only a couple percent off right now. I think we were up about 55% when I said that a couple of weeks ago. We are going into this seasonally weak period. And again, like I said, I would never trade off of this, but I think we have some headwinds, but we also have a huge tailwind, and I'm going to talk about that in just a second. That's the Fed, of course. But again, I think that we got to be a little suspicious and play this rally, but not get married to any names here, and really to look at it as a trading environment that at any given moment with the right news, we could easily have a correction going into, like I said, this seasonally weak period. Now, also this picture just seems to be continuing to be grim as far as the divergence is concerned with looking at the NASDAQ, again, going into new high ground. Again, I haven't seen where you get this type of divergence for this long, and you have where you're below the 50% mark on the percentage of stocks above their 200-day. This is on the NASDAQ, of course, and you're way above the 200-day like this. I haven't seen this turn out well, too many times, if ever, going back and, my 37 years of doing this. Not that I've been following this for 37 years, but I've been following this for quite a while. And this just shows that, we've got a lack of participation as far as the NASDAQ's concerned. Now, what could happen, and I've seen this before, where you get what I would call a stealth correction. And that's where you correct and the indexes don't correct or don't correct much, but beneath the surface stocks correct, and they sort of rotate through the groups and get the correction out of the way, and then the market goes into new high ground, and then you can see some improvement in those percentage of stocks, and you start to move up off the lows. I have not seen it really enough improvement here to say that the participation has really increased to a point where you would say that you can say that that's happened and it's run its course. We did see the advanced decline line top already. going back, of course, June, July. So, but we are within striking distance of hitting a new high. And again, this top's usually ahead of the market. So, if you're hitting a new high in the advanced decline line, then that means that the market has further to go. Now, the Nasdaq advanced decline line, I wouldn't look at the same way as far as that it topped way back here in February, but it has broken down quite considerably. And again, I think this just sort of goes along with that picture of the lack of participation in stocks above their 200-day moving average. Now, on the Russell, this is where, we've seen, the small caps just not participate at all and just move sideways for the entire year. But we keep holding these lows here. This is definitely some key support. So I think if we break down below that, that would be lookout below. But we came rallying back again and, still holding up here in this range. So no real direction, just still in a back and forth whipsaw environment. To me, this is still not a risk on environment where you're not seeing the small caps and seeing the broad market really chime in here. One good thing that we saw here is, let me just move this over. You can see that IBD 50 index. If you remember, I was looking for this to break out and was forming this little pivot here. You can see the relative strength has been outperforming. So we've turned up here from in July, mid-July. That's nice to see that the IBD 50 is outperforming and we're breaking out here. So this bodes well for the type of names that we would traffic in. However, it's thin. It's really thin. There's not a lot of names setting up. And then when there was a lot of names setting up, we saw a whole just giant list on the buy alert list. We had so many that failed. So it's really, it's been a very strange market. I did pretty well this last month, this most recent month, just doing, again, short-term trading and, financing my risk with those short-term profits if I hold for any longer than, those first initial moves up. So again, but not really, killing it, of course. But again, there's definitely been some money to be made, but you got to be real nimble and quick. Now, again, it kind of bizarre, hitting new highs and the sentiment. Now, I follow a bunch of different sentiment readings. This is just one, and some of them are at lofty levels. But the Investors Intelligence bulls moderated quite a bit here, and you're down, around the 50 mark, which again, this isn't, bearishness from a contrary standpoint. This isn't where you would say you would look for a bottom in the market, but considering, we're hitting the highs, we're not seeing that bullishness, and that's what would really worry me if you blew off here to the upside and you had a lot of bullishness up above 60%, 65, maybe even higher, like we had in 2018, 67% bulls. That would concern me, and then I would sell right into that any extended stocks. So again, I was talking about the tailwind. We've got this headwind that we're looking at with divergences and a seasonally weak period. Seasonally weak period is not that big of a headwind. Like I said, I would never hang my hat on that solely. However, the tailwinds are much more compelling, and that is that. And if we go back here, of course, recently we had the Jackson Hole meeting or symposium, if you will, and Powell was dovish. He said that rates would be held off, hikes would be held off, and see how the economy is progressing. And if you remember back a while ago, I said that the COVID could turn out to be something that's actually good for the market because it would tie the Fed's hands, and that's exactly what we're seeing here coming down the road here, weeks and whatever, a month or so later. He said today, with substantial slack remaining in the labor market and the pandemic continuing, such a mistake could be particularly harmful, meaning making a mistake of raising rates too quickly. He also indicated that there's inflation, but he believed it was transitory. So that tells you, where the Fed's at. Our own bear market markers, when we look at the fundamentals of the market and the long-term trend model, are solidly bullish at this point. So what this suggests is that a major bear market is not around the corner, but we could get a correction. I mean, you can get a stock market, meltdown. You can get a crash. You can get a 15%, meltdown, like a mini crash or like a flash crash. That could be in the context of a bull market and still be in a secular bull market. So, but again, I think we got to look at corrections as buying opportunities at this point until we see a change where inflation got out of hand and the Fed started jacking rates. Otherwise, there's some real support here for the market with the type stimulus that we have here. Also, when we take a look at the yield curve, in the last 5 recessionary bear markets, the big bear markets over the last 40 years, the yield curve went inverted, and that's the 3-month 3-month rate above the 10-year rate. So again, right now, if you take a look, I'll just fast forward here, you can see here were the sell signals here when you went above, and you inverted here too before the big bear market 08 into 09. And then recently we also had that inversion that took place before the recent pandemic meltdown. But again, we don't see that right now. So there's not an inversion. Inflation has definitely reared its head up a bit here. But again, when you take a look at the bond market, take a look at the 10-year yield, it's come in. So I think that's where you're going to see if there really is an inflation problem, I think you're going to see it picked up in the 10-year, and the 10-year is going to get above 2%. That would be where I would start to get concerned. So summarizing, first we get traction, then we get no traction, and then back and forth, volatility, rotation from different groups, from, sector, or even, from themes like cyclical to growth, stops being hit, and then reversals coming, stocks coming ripping back here. Very selective, very selective. The seasonally weak period, I still think, I want to respect the fact that I'm seeing that divergence with the participation and going into this period. A correction I still think is possible, but I'm going to play the setups. If the stock setup, I'm going to buy them until they stop working. And if they're giving me trouble, the breakouts are giving me trouble, well, then, I've got to assess how things are going in my own personal trading and make a decision whether I got to tighten up my stops, or, whether I'm going to short-term trade and tighten up my stops in relation, or if it's just too choppy, then to just sit out and wait till things improve, and and then go into a pilot buy mode and take test trades until I get some feedback that things are really working. Anyway, we got the Master Trader program coming up here. We're starting to prepare for that. David Ryan and I are going to be going over the workbook next couple of weeks, and we're starting to put some new information in there. There's a new section that we're going to be having, and also a lot of updated charts. We've also got a couple new market wizards that are going to be instructing, of course, Tom Basso, who was a legendary stock trader, and then one of my favorites, Larry Height, who is someone that inspired me for risk management back many years ago, back in the late 80s, early 90s. And then, of course, our own Mark Ritchie is going to also be one of the instructors. All right, so let's take a look here. I want to go over some names here. I got to tell you, once again, I'm bringing out some names here, but I'm not finding a lot of crisp setups. There's a few here I took, here and there. There was a few good ones last week and a few that were still in, but I'm going to go over some of those and also start off with the buy alert names. So this short alert that I put out, and I still think this is one that we should look at as a potential short. We broke down here and we're forming what I call a ledge, just in a square pattern. Stocks don't generally bottom in a square fashion, and when they break hard like this and they can't rally, usually that's a sign of weakness. You're going to continue weakness to the downside. So this is one, just thought I'd show you real quick, but let's go over a few here. CAR, again, you're forming just a classic sort of cup with handle here, some volatility here, trying to tighten up on the right side. So this one may break out. CSTM, another one where, again, you're forming, this VCP, trying to tighten up here. If we can go inside, this is one that definitely would be a classic breakout from a VCP. Not sure if I'm going to get interested in it personally, but yeah, one that we'll probably highlight. DoorDash, DASH, of course, big correction here, trying to tighten up on the right side. I probably wouldn't mess with that myself, but thought I'd just point out here. I'm kind of, again, I'm pointing out some of the best of the worst here. I have to say that I'm really stretching for ideas this weekend. GE, again, is trying to bottom over here, if you will, or stay within this, basing. I still think this needs to maybe tighten up, but that's one that I'm watching. IRM last week, of course, we had Buy Alert. Tried to come out here, break out of a nice little tight area. This is very tight. This is an excellent VCP. No volume. So it didn't come out with any volume. Maybe if it pulls back, goes inside, starts turning up, you can buy it or turning up or buy it on a follow through. Not sure, but I'm going to keep an eye on that. KRA, a chemical stock. It seems to be wedging up a little bit here, but it did break out big here, pulled back, was able to hold up, and now I'm keeping an eye on that one. Lennar, another one where you've got just forming a VCP here, trying to tighten up here a couple days. So this is starting to set up. LKQ, we've seen this many times on Buy Alert. Again, forming a base here, tried to come out over here and then stalled out, and since then you reset. Maybe this is one that we can get interested in. MDT, of course, which is Medtronic. So this had a big breakout here, and since then it's just been holding up. So I really like the way that this is not coming in and really holding its ground here. Not sure if I'm going to play this. You guys see, maybe it pulls back when the market's weak one day. Not sure yet, but I do like the big breakout on the volume, the fact that it's holding up. So I'm watching it. PAG is one that came out or actually was setting up right here, was trying to come out right here, and then came in recently and now formed a little pivot here. But again, I think this needs more work. But I am watching it and seeing if this can tighten up on the right side. What else? RAIN. So this has a little cheat area here, and this is definitely a little funky. It's a newer issue, and if you go to the left, there is some supply here. So I'm definitely concerned about the supply. I'm going to watch this. This is one that, if I was playing this, I probably wouldn't buy my full position coming out here, because you're just going into too much overhead supply. That's really immediately to the left side. But a lot of these IPOs have been ripping, and then I would try to get on them on a cheat or a low cheat if you can. RBLX, another one where, again, this one came out of an IPO base here. Since then, basing, trying to form a right side. Looks like it needs more work, but I'm giving you sort of an early heads up. SCHW, which is, of course, Charles Schwab. Again, trying to tighten up on the right side. One day here, pulled back. Actually came out on Friday, low volume. So watching that. SEAS, which is SeaWorld. Yeah, again. So again, this is where you're getting that cheat area, right? But I don't like the fact that the 50-day is in this downtrend. So it may take a little time if it can tighten up and give a little bit of time for the 50-day to flatten out and then come through here. This is a potential. I like the way it came off the lows here on big volume. And then, of course, we had some support on Friday. It came in and then had a good close, or halfway decent close, on an increase in volume. So it looks like there's some support here, but now I need to see it tighten up and develop, a low risk entry point. Square is one where, again, we bought it here and it came down, you had a bunch of lower lows and just drifted a bit too much, but trying to reset. And again, it seems like the money just keeps going back to FANG type names and some of these, these bigger NASDAQ names. So, if you get a chance to buy some of these names at a decent pivot point coming out of the base, you probably want to take it. TEX, another one, forming here a pretty good sized base, trying to tighten up on the right side. And then there's ZI, which on Friday, I put it on Buy Alert, and then of course it pulled back a bit too much, got it below the lows, and then I took it off. Actually had it on Buy Stop. Ended up taking out those highs, of course, intraday. But here, if it goes inside, this may follow through. This is holding up. You're getting, I wouldn't call this a cap pattern, just call this a natural reaction, setting up this little mini, if you will, cup completion cheat. But we'll watch that. Let's see. So as far as some of the stocks that were recently purchased, or some stock names that we're holding, JHG is acting pretty good. COF. Now we're not up big on these, 5%, 4%. This, of course, COF was bought. What's the date on that? I think it's 810, right? Yeah, 810, which is right over here. I don't have that marked. Let me mark that in right there. So we went through that pullback, and now it's starting to turn back up. So we've seen that in a number of names. AVY recently. Just bought it coming out of here. Let me show you. That was on, let me just confirm that, 825, right? Yeah, 825 right here. So that's really classic. I mean, this is just a classic VCP. You got a 2-day super tight here, and it comes out of the pivot really just perfect so far. 3 days up, that's acting fine, only up about 2.5–3% on that, but it's acting good. DFS is one that, and again, there's nothing marked in here. Sorry about that. Let me mark where we bought. That's on 8.6. So that's over here, 8.6 right here. So bought that coming out right here. And another one, we've seen a bunch of these names where they broke out and they pulled back. Some of them we couldn't make it through the pullback. The stop, they hit the stops, and then some of these, they pulled back. They did not hit the stop, and then we're still in them on the platform. So this is one of those, up about 2%. So now, these lows that these pullbacks they went through, they're pretty important at this point. Usually, when you pull back like this and you turn back up, you should hold that low. So I'd watch those lows carefully, maybe even set your stop below there. TPX. So another one where, here, of course, bought it on 8.12, came in, but wasn't enough to stop us out. And then I actually put an ad on and bought some myself as it turned back up here, went to new high ground. So this is acting pretty good. I like the way this looks. I like the way it's acting. Let's see what else. JBHT, another one. Bought this on Friday, and nice, just classic VCP, real tight on the right side. You can see 1, 2, 3, and then you get that third tightening, very tight, broke out. Volume was elevated, not above average, but a nice day, pretty good sized day. Up actually, it's actually probably, it wasn't a huge day. It was 2.5%, 2.64%. So relative to the chart, it was a pretty good day. Let's see, THRM is another one that looks similar to a something like a TPX, where you had that big move up, and then you get that short pause. So again, this one moving into new high ground on Friday. Let's see, CNXC, which we bought on 8.27, and that was, of course, on Friday. This one was a little squirrely, but you see the volume was up, and it came out here, so it's acting pretty good. I was a little worried about that around the breakout. It didn't get going, but it ended up having a decent close on the thinner side, of course. SC, another one that was recently bought. This one, I don't know. This one here is a little bit extended here. Probably maybe chasing this a bit. This is probably a look back at this as a bad buy. Maybe I should leave this alone. But hopefully it's going to work out. We're still the ARKK. The ARK fund has not taken out this low, which was the stop that I set. Bought it over here, so we're actually still in this, down about 1%. Goldman Sachs is another one that pulled back, sort of like all the rest of these other names, but didn't really come back all the way to the breakout. We bought it back here, and now it's turned back up here and is acting fine. We're actually up about 10% on that, but we did reduce some. URI is another one. We're up about 5.75% on this one. Pulled back again. You see a lot of these broke out and then pulled back. So, if you had your stop at break even, you probably got knocked out of some of these. And there's BSY, which was bought on the 26th. That was on, I believe, Thursday. This is the type of action I really don't like. I think we got clipped on half of this, and we still have a half position, of course. This is the type of action that, making me nervous. So we see more of this type, then I'd get real concerned. And we've seen, something like CRWD. When you look at something like this, where it's setting up and then it comes in and it looks like it's just falling apart, and then wham, it just comes ripping back. That's the type of action that, we're just not going to be able to participate in. This is just too volatile. There's just no way that I could, predict this type of move or even have any basis for buying it. And we've seen that in a number of names, and then some have just, crapped out, like SWIR. Remember here, broke out. I mean, this was just perfect. You had beautiful burst up here, up this right side, tightened up. And if you look at a weekly, it was a big, nice base. And look at this big outside week on the weekly. Just ugly. That's a big volume there. That's not what you want to see after a breakout. So another one that just, came down here, and who knows? Some of these come ripping back, but you just, like I said, there's no way to be able to play that as far as the way I approach the market. So SKY, this is one that we bought here, and this has acted great. It was really acted very good. As a matter of fact, this one actually came. I got to this through my next door neighbor. Believe it or not, my next door neighbor asked me about a stock, and I said I didn't like it. So I told him, I said, well, actually, the leader in the group, the one that I would look at is SKY, and he bought this, and so this is one that I got led to by looking at the laggard and then looking and saying, okay, who's the leader in the group, and then it's set up here. So we're up about 18% on this one. So this is acting really well. Let's see. So a few things that, like I said, we got knocked out of some names that maybe we were a little too tight on, something like a GSM, where this stock set up here, and of course it's been doing really well here, but a little too tight maybe in the pivot here, or something like Nvidia, but I believe Nvidia went into earnings, right? That's we got knocked out before earnings, and that was the reason why. But you drifted off here. We tried to buy it as it turned up here from the lows, and I was hoping it would get out before earnings, but then of course came ripping back here, like some of these in what we call a slingshot fashion. Even the IBB drifted off a bit, and again, I think maybe I'm guilty of being a little too tight on this. I was going to give it a bit more room, and then we tightened the stop, and again it came back here. So a few of these names, and even what CLDX was the other one, wasn't it? Let's see here. Let me just scroll up my screen here. Yeah. CLDX, another one where you come out here, comes in, undercuts some of these lows in the pivot, and then comes back here. So again, sometimes you manage your risk. You keep real tight on it, and you have those smaller losses. But the downside is, or the upside, that they turn around, they go back up, and you're sitting there watching them. If you don't have a reentry mechanism, or it doesn't trigger that reentry mechanism, you're on the sidelines while the stock you were in goes higher. I know it's frustrating. I know for some of you it's really frustrating. It's just part of the business. It's part of the game. Sometimes the market's volatile, and you get whipped around like this, and you get knocked out. I call it the zag zig, when you zig when you should zag, and zag when you should zig, and the market's going in opposite direction of you. You get stopped out, turns around, goes back up. You start levering back up, and the market pulls in and stops you out. Again, if this keeps happening in your portfolio, and you're running up losses, you're getting stopped out repeatedly, well, you have to take a look. What's going on here? Is this something that I can adjust for? If not, you got to sit out. You got to sit out, and you have to, wait till this type of environment calms down, and you just get a better, more conducive environment to your style, your strategy. The steel stocks, I think may make another leg here. They're holding up pretty well. These came out really nice. It's hard to say though. 1 minute, you have cyclicals, are doing well. There's news on the economy. There's news on the Fed. The next minute, boom, they come in, and growth is taking off, and the FANG stocks are moving. Really hard to latch on to any trend here, or any theme for any length of time. STLD, of course, we were in NUE, STLD, and US Steel X, of course, forming this little, cap, if you will. So maybe you can play these, for another leg up here. You have X, of course, which is US Steel, and that's about it. I mean, I don't see a whole lot of names here. Again, I'm screening all week though, and we're looking, we're turning over every stone. We'll see what happens here and what develops. And the market, again, the Fed is, firmly behind the side of the bulls here, as far as, once again, it was looking like everybody was expecting the Fed to go into Jackson Hole and talk about tapering, and Powell did the exact opposite. He's talking about how there's no inflation is transitory, and there's risk here, to the downside in the economy. So again, this is what's holding the market up here. So monitor the platform. Let's see what transpires over the next few days. We do have some open positions long. You're probably long some positions. If not, don't be in a panic. Look for those low risk entry points, and just be patient. Be really patient here. This is a time where you're later stage in a bull market. You're going into a seasonally weak period. You've got a lot of volatility and rotation. There's been a lot of big gains made in stocks and in the market in general. So this is a time where if you have to wait out a little while and wait for a reset, you get a good correction and you get a reset. that'll be your golden opportunity. There will be that golden opportunity where you'll get, a correction, or your style will just start to work. What we do will start to really hit on all cylinders. You want to wait for those periods before you get aggressive. Don't have FOMO and the fear of missing out, and let the indexes start pressuring you into making bad buys or stupid buys. And just be patient. All right. All right. So monitor the platform. Tomorrow I'll be in the room for Q&A. And we'll see. Mark Ritchie, I know, is not feeling too well. So we'll see if he's got himself feeling a little bit better. And if I think he said he's going to be in the room, so that'll be good. But we'll see. If not, I'm going to be there either way. And we'll see you tomorrow for Q&A. Okay. Bye-bye.